you insure your car.
Yes.
Every year.
Yes.
You insure your health insurance.
Yes.
Every year. Every household items.
Yeah, and I've not claimed anything.
Of course, with the hope that
Nothing will happen.
That insurance will never have to kick in.
Yes.
But if that is actually the case, and you drive for 30 years, you never make an insurance claim.
Yes.
All those insurance premiums are
up in smoke.
Up in smoke.
Yes.
They're giving you flexible payment terms. 10 years, 15 years, 20 years, up to when you are 65. But still the commitment is daunting. 10 years is still a long time.
Yes.
It lasts longer than most relationships.
This Nairobi especially.
Yes. So people have concerns. What if I lose my job? What if I'm in biashara and for some reason things are not looking up this year?
Yes.
What will happen if I am unable to pay my premiums? In case it's a short-term mishap in your finances,
yes,
your policy remains in force
for how long?
90 days between premium payments. So let's say you've been paying for the last 2 years faithfully.
Yes.
Something happens and you are unable to pay this month.
Yes.
It doesn't mean that your policy has lapsed.
Yes.
You are still under cover for 90 days from your last premium payment.
Yes.
Once you get beyond 90 days and you hit now day 91, then now you're talking about policy lapse.
Yes.
But lapse not in the traditional sense or in the general sense that we see in other insurance policies.
It's like pausing. It's like
communication is always key.
Like any marriage.
Yes, absolutely. You have 24 months within which you are able to reinstate your policy.
Yes.
So let's assume you're going through a particularly difficult period in your life.
Yes.
And for that reason, you are unable to pay those premiums.
Yes.
As long as you notify through your agent, your underwriter,
that this is what's happening for a period of
you can request to pause that policy
for up to how long?
Up to 24 months. And once you find your feet,
then you
are able to reinstate your policy. Hello, and welcome to the Sign Out Podcast, a platform where we take a no-frills look at the insurance industry in Kenya. We will seek to explore the costs, the benefits, the exceptions, and the caveats that go along with the products that are available in the industry. We will also seek to demystify any pre- and misconceptions that you may have about what is available in the market, while helping you future-proof your life and the life of your loved ones. We are your hosts, Elisha Kidenda
and Kenneth Kagwe. We hope you'll find this beneficial and help you avoid some of the mistakes we have done in our own lives and set you on a path to financial freedom and generational wealth. Welcome.
So in the spirit of no frills, why don't we begin with a layman's definition of insurance?
In the simplest terms, insurance is a product that protects you against a risk that may or may not happen at a fee that is a fraction of the value of the whole asset.
Very well put. And for those of you who are watching at home, we'd like to keep that definition in mind, or maybe write it down somewhere so you have it when we go through this series. It'll be very key in understanding what we are speaking about. So just to recap, insurance is a protection against a risk that may or may not occur for a cost that is a fraction of the value of the asset that is being protected.
Yes.
The subject of today's episode is life insurance, and we hope by the end of this discussion, you will come to the same conclusion that we have, that life insurance is the daddy of all insurance products that are available in the market at the moment.
So, what is the difference between medical health insurance and life insurance?
So medical insurance is a cover against disease or injury or anything that may send you to the hospital. So you think if you come down with a case of malaria, you would expect that your insurance would help offset the cost of your treatment. Similarly, if you're involved in an accident, let's say on Thika Road, if you were to break your leg or something, you would hope that your medical cover would be able to pay for your treatment, your x-rays, and whatever medicines that you may require to get better. Life insurance, on the other hand, in the simplest terms, is a cover against death.
That sounds scary.
And now, when you mention death, people generally switch off.
Yes.
And maybe it's the mortality of it. But for me, it is very counterintuitive for you not to insure against death. And the reason is I'll take you back to the definition of insurance that you gave us at the beginning. Insurance is a cover against a risk that may or may not occur.
Yes.
Now, in life, they say only two things are certain.
Yes.
Death and taxes. For taxes, you've come to the wrong place for assistance.
File your returns soon. There's a deadline coming up. Yeah.
For death, if you are looking at insurance options for yourself, wouldn't you think it's prudent to cover the one risk that is a certainty? Like, no one gets out of this life alive.
Yes.
Each and every one of us at one point or the other is going to punch our final ticket.
So it's a guaranteed risk.
So wouldn't you want to cover at least your loved ones?
Yes.
Or yourself? And there's one of the main misconceptions about life insurance is that the benefits only accrue to your dependents, to the people who remain after you've gone.
Yes.
But that is not the case.
Okay.
There are a number of instances where life insurance can be applied to both the living and the dead. In fact, there are three main instances when life insurance is paid out.
When you say living, you're saying living to the person paying the policy.
Yes.
Okay.
The person who is paying the premiums, who is taking the cover, who is naming the beneficiaries.
Yes.
So the first one is the obvious one.
Yes, death.
When you die.
Yes.
If you die, your beneficiaries, your children, your wife, your spouse, or whoever is depending on you will be paid.
Yes.
But for people who are still living, you ask yourself, what is the benefit that accrues to you for paying all these premiums for whatever period that you're going to pay those premiums?
Yes.
The second instance is in the event of a critical illness.
For example?
So when you're talking critical illness, it's what you expect.
Yes.
It's the big ones. It's the cancers, it's the heart attacks, it's the strokes, it's the kidney failures.
Yes.
Anything which would require exceptional amounts for you to undergo treatment.
Yes.
And chances of survival are not, let's say, 100%.
Yes.
So in the event of critical illness, a life insurance can offer cover for this. And remember, a lot of the medical insurance that is available in the market have these critical illnesses as exceptions.
Yes.
Or the extent to which the cover is extended on the critical illness is not probably what you might think.
Yes.
We always advise people to read the fine print in the policy document that your underwriter provides you, because you can have, let's say, a cover of 5 million.
Yes.
But what is actually covered under, let's say, cancer, probably is 500,000.
Yes.
But yet your treatment
costs more than 5 million.
More than 5 million.
Yes.
So life insurance has an added benefit, which is known as a rider.
Yes.
A rider is an additional benefit that you can add onto any insurance policy that gives you an extra amount of cover for a very nominal fee. And we will go into the examples as we progress in the discussion.
Yes. How else is You said critical illness.
Okay, so the third instance
Yes.
is in the case of accidental death or permanent and irreversible disability.
Okay.
So you may also be doing all the right things.
Yes.
You may not contract any lifestyle diseases.
Yes.
You may just thrive.
Yes.
But as you leave this building, you are knocked by a border
Yes.
and you lose your legs.
Yes.
Especially if you are in a career that requires the use of your legs, or you may lose your eyes,
Yes.
or whatever limbs that you may
Yes.
lose, or you may just severely incapacitated that you are not able to earn a living.
Yes.
There's no health insurance that will help you pay school fees for your children.
Yes.
There's no health insurance
yes.
that will pay your rent.
Yes.
So this cover provides you protection in the event of such a thing happening.
Yes.
But more than that, life insurance has 6 key uses in wealth management.
Can you just name them? Then we'll go to details maybe about them later. But or is that the only thing that makes it the daddy of all insurance?
Well, maybe I'll go through those 6 things and then you'll tell me
Yes.
if you share my opinion
Okay.
on why life insurance is such a high value product.
Yes.
So the first use case for wealth management for health insurance is income protection.
Not health. You said health insurance, or you said
life insurance. Life
Okay.
insurance.
Yes.
Sorry. So the first use case is income protection.
Okay. Let me note it down.
Yeah. So we have. I'll just run through all the 6 benefits
Then
first, and then maybe we can expound on them as we go along.
Okay.
So you have income protection.
Okay.
You have estate planning and enhancement.
Yes.
You have wealth accumulation.
Yes.
You have wealth protection.
Yes.
And you have
for businesses. Do you have anything for businesses?
Yes. Business continuity or business succession planning.
Okay, good.
So let me just go. Let me start with income protection.
Yes. What do you mean by income protection? How does the life cover help you with that?
Okay. So you have to think of the mindset of someone who's taking life insurance.
Yes.
Who probably has not had this discussion with us.
Yes.
What are they looking to achieve when they take life insurance? On face value, you're looking to protect your dependents. You're looking to protect your loved ones.
Yes.
And it's a financial protection.
Yes.
Because your loss the emotional weight of your loss cannot be compensated by
money.
Anything.
Yes.
But you can hope to maintain the lifestyle that your family has been accustomed to, even in your absence.
Yes.
So let's assume you are in a two-person household.
Yes.
It's you and your wife.
Yes.
And perhaps you have kids.
Yes.
And your contribution financially to that family on a monthly basis, let's say, for example, is 200,000.
Okay. Mm-hmm.
What you want your life assurance to achieve,
yes,
is to maintain that 200,000 income in your family in perpetuity, whether or not you are there.
Okay.
And how do you achieve that?
Yes, that was my next question. Yes. So how do you do that? For example, how do I do that 200,000?
Yes.
I want my family to be set.
Yes.
Whether I'm here or not.
Yes.
How do I do that?
Yeah. Because within that 200,000, that's where you're paying your rent. That's where you're paying school fees. That's where you're buying all these things that you are doing while you are alive.
Yes.
So to replace an income of 200,000,
yes,
simple mathematics is that you need a sum assured of 10 times your annual income.
So that is like 2.4 times 24 million.
24 million.
Okay.
So that also answers the question of how much life insurance does one require?
Yes.
Because when you have discussions with people about life insurance,
they don't know what
the figures that are thrown there are from
intimidating.
minuscule to
Intimidating.
astronomical.
Yes.
You are actually able to take a life insurance cover of up to 500 million at the moment in this market.
Yes.
But with the premiums that go with it are commensurate.
Yes.
So when you are trying to establish how much life insurance you need to take as an individual,
yes,
those are the kind of considerations you need to make.
Yes.
What, in my absence, what will I need to replace financially?
Yes.
So to have a cover of 24 million for someone like you.
Yes.
How old are you?
I'm 40.
Mm-hmm.
And I regret not taking it 10 years ago.
Mm-hmm.
Could you do for me the math?
You're about to regret it a whole lot more. So let's just take the example
Yes.
of you.
Yes.
You are
40.
You are 40-year-old.
Yes.
You're male.
Yes.
Non-smoker.
Yes.
And you want to take a life cover of 24 million.
Yes.
To replace your income.
My income. Yes.
The cost for you in your current state.
Yes.
At the age of 40.
Yes.
Will come to 23,000
per month.
Per month.
What if I did it when I was 30?
If you had taken this policy when you were 30,
yes,
the cost would have been 15,000 a month. Now, one of the main challenges that people have with life insurance is that there's a misconception in the market that life insurance premiums are paid for the entirety of your life. And people are very reluctant to
That is why I never took insurance 10 years ago.
Yeah. People are reluctant to make a commitment of that duration.
Yes.
Because it's a serious commitment.
Yes.
But that is not the case in the market as you speak.
Yes.
There is a provider who has flexible payment terms, flexible premiums.
Yes.
And offers incredible value for a cover of this nature.
And this 23,000 I'm to pay.
Yes.
Is that for how long?
That's for 10 years.
For 10 years.
Yes. But you have the option to pay for 10 years. You have the option to pay for 15 years, for 20 years, or up to when you are 65. And the duration, the longer you take a premium, the lower the lower you take a policy, the premium payment period.
Yes.
The lower the premiums are, but of course the commitment is longer.
So this 15,000, if I'd done it 10 years ago, I'd be done.
Yes.
I'd have been done with my life insurance commitment.
Absolutely.
Today.
Your cover would have been locked in for life.
For life.
Yes.
Till the day I pass.
Absolutely.
I'm regretting it already, but okay. So what other benefits are in life insurance besides income protection?
So
replacement, I mean.
The second one I would like to speak about is wealth accumulation.
Okay.
You know, you and I are...
Okay, before we move on, can life insurance cover maybe a debt like a mortgage?
Well, it can be used as security on a mortgage. If you've ever taken a mortgage,
yes,
or a loan of that nature, you will have gone through the process with the bank, and you'll notice that they actually take an insurance policy out on you.
Yes,
there are three types of life insurance.
Yes,
or three categories.
Yes,
there is what we call endowments.
Yes.
Then there are term life policies.
Yes.
And then there are whole life policies.
Okay.
So the difference between an endowment, a term life and a whole life policy is this. An endowment is more or less a savings product, which has an added life and assurance cover tacked onto it.
Okay.
So they are typically used for specific goals that one might have.
Yes.
So you may say, for example, you have your daughter.
Yes.
And you know that in 10 to 15 years, she's going to be going to university.
Yes.
And you already know the university that you want to send her to.
Yes.
But you also know the cost that comes along with that university.
It's heavy.
It's quite heavy.
Yes.
So you want to start planning early.
Yes.
So you take up an endowment policy.
Yes.
That acts as a form of saving with some benefit.
Yes.
In terms of returns, but also with a life cover tacked onto it, such that in the event that anything happens to you along the way, your daughter is still going to that university.
Yes.
Come rain or sunshine.
Yes. But why is there misconception that endowment fund is not a scam or it's not value? Or
for me, I think it's because of what they're comparing it to.
Okay.
When people see endowment policies, they always make the comparison with the other savings products that are available in the market.
Yes.
So you have the MMFs or the bonds and T-bills.
Yes.
But to do that is you're comparing apples and oranges.
Why is that?
Because they're not the same product. One is a purely saving and investment product.
Yes.
If you're talking MMF or bonds
or whatever, yes.
But an endowment policy is it has the added advantage of the life insurance that comes with it.
Okay.
So it cannot give you the same.
Those are two different products.
The same kind of returns that you would expect from the other money market facilities that are available.
Yes. On the issue of can I use life insurance as to pay debts like a mortgage or my personal loans if I need to, or how does that work?
Well, debts, unless the sum assured is becoming payable, which means an unfortunate event has occurred.
Yes.
But life insurance can actually be used as a security on things like a mortgage. If you've ever taken a mortgage from a bank, you will notice that part of the documentation that they require you to fill out is an insurance policy against your own life. That's a term life insurance. It covers the bank in the event that you pass away
before finishing
paying your mortgage.
Okay.
Now, if you take out a whole life insurance policy on yourself, you are able to assign that policy to any mortgage that you would want to take from a bank.
Yes.
So yes, you can use it when you're taking out a loan.
Yes.
But for debts and such things, you see the sum assured only becomes payable in the event of those three instances
the critical,
which is your untimely demise, critical illness, and
permanent
accident and permanent disability.
Okay.
But at that point, I would imagine your priorities would be different.
Yes.
Yes. Apart from when you're dead, the people who survive you will be able to offset any debts that you have.
Okay.
Yeah.
So you said there are six. We've done the six major reasons why you think life insurance is the daddy of all insurance.
Yes. So as a tool for wealth management, it's unmatched.
Okay.
Yeah.
So on the income replacement, okay, I kind of get what you're saying. So what is the other one?
So the next,
you had mentioned wealth preservation.
Wealth preservation. So, one of the questions I always get is, does a life cover account for inflation or the macroeconomic environment?
That was another one question I was going to ask you. Because 10 million now is not 10 million 20 years from now.
Yes.
Yes.
And it varies from underwriter to underwriter.
Yes.
But remember, at the beginning, I asked you the question: wouldn't you consider it prudent
Yes.
to cover a risk that is
Guaranteed
to happen?
Yes.
And that choice of words was deliberate
Okay.
because of the underwriter who I want to speak about, who is offering what, in my opinion, is the best life assurance cover on the market.
Can you mention them?
Yes.
Okay.
Which is Prudential Insurance.
They have a building in town? Or Better Street?
Yes, but they're no longer located there. That building was actually built in the 50s when Prudential initially was in this market before they left in the 70s or 80s because of the the geopolitical environment.
Okay.
But they're now back since 2014.
Are they the same ones who insure the Titanic or people in the Titanic?
Yes. Is
it the same Prudential?
Yes.
Okay.
So they did not insure the Titanic, but they insured a large number of the passengers who were on board the Titanic, and they paid all the claims, which gives you an idea of how storied the history is of Prudential.
Yes.
They've been in existence for over 170 years. They are the number 4 life insurance provider in the world.
Okay.
Not just in Kenya, in the world.
Okay.
So
on the issue of wealth preservation. Yes.
Yeah. So when you take out a whole life cover with Prudential Insurance, there are bonuses that are tacked on to your policy for every year that you're covered.
Yes.
Until your policy matures, which is at the point of untimely demise. I always say untimely demise because I never imagined death as timely. No one is waiting for it or anticipating it.
When you mean bonuses, or so in this, for example, if I take a 24 million sum assured, what would that mean?
So the bonus, first of all, it's not a bonus that is paid into your pocket, which you can enjoy every year and have a good time once a year when you're
celebrating life,
the anniversary of your policy.
Okay.
The bonus is paid out into your sum assured.
So it's topped up.
It tops up the sum assured. So, for example, for simplicity of calculation, you take a cover of 20 million.
Yes.
The general rate for the bonus, or the average of the bonus for the last 10 years has been around 2.5%.
Okay.
So 2.5% of 20 million is...
That's like 500?
Yes.
500K?
It's like 500K. Is it 500K?
The math. They want to drop mathematics from the syllabus for a reason.
Yes, it's 500K.
Yes, 500K.
So every year that you are alive, above ground, even after you've completed your 10 years of premium payment.
Every year?
Yes, you receive a bonus on top of your...
500,000 on top?
Yes.
So that guards me against...
So imagine you take a policy today.
Yes.
And in 20 years' time...
Yes.
Is when you pass away.
Yes.
In 20 years' time, your 20 million sum assured would have grown to a 30 million sum assured.
So the 10 million strictly came from the bonuses that were...
Yes. So when you ask if, when we're speaking about wealth preservation,
yes,
people always say the time value of money.
Yes.
20 million today is not 20 million.
20 years from now.
20 years from now.
Yes.
So in the back of your mind, you're always thinking, whatever cover I'm taking for my beneficiaries.
Yes.
How impactful is it going to be if I survive another 40 years?
Yes.
So it's a fantastic tool for wealth preservation.
Yes, I see what you mean. And how does life insurance help in because succession, because one of the longest standing, I have a background in law.
Yeah.
And one of the longest standing succession cases is probably over 40 years old. That's a whole generation of people who have been sidelined by. So how does life insurance help in such a situation?
So I'm glad you brought it up, because that brings us to the third key benefit of life insurance
Yes.
as a tool for estate planning and estate enhancement.
Okay.
You know,
Is it estate planning?
and estate enhancement.
Okay.
So when an individual passes away,
Yes.
and let's assume they've worked hard,
Yes.
they've built up quite a portfolio of assets
Yes.
for themselves and their family throughout the extent of their lives.
Yes.
If you have ever attended or been present when a rich man passes away,
Attention.
we've seen so many cases
Yes.
in the news
Yes.
where a well-to-do individual passes away and
Yes.
people
From
just
the woodworks come.
pop up
Yes.
from the woodworks.
Yes.
I was with this
yes,
guy in the 1970s.
Your
This
primary
is-
school girlfriend.
Yes.
Mm.
These are challenges that are experienced by everyone at that point.
Yes.
What you want for yourself and your family is continuity in the immediate
Yes.
in the immediate aftermath of your
Demise.
passing.
Yes.
So every other asset class has to go through succession. It has to go through probate.
Probate. Yes.
And probate, as you so rightly identified,
Yes.
can
Can
be
drag.
never-ending
It can
process and
yes.
can really be draining, and it's not something that you want people who are grieving
To be going
to
through.
be going through.
Yes.
The great feature about life insurance
Yes.
is that it does not go through
Probate.
succession.
Yes.
The beneficiaries that you name
Are strictly there.
as your beneficiaries on
Yes.
your policy are paid almost immediately upon your demise. And
On that thing for being paid immediately. There's a lot people say about insurance companies don't pay. Me, I don't want to pay as in 20 years and then the insurance company collapses or doesn't pay my claims. As in, that's like really waste. That's really hurting. So
that is a valid worry, and you should be worried.
yes.
And usually, what occasions such delays or such runarounds is the underwriter. Who are you entrusting with the future of your beneficiaries, of your loved ones, of your dependents?
Yes.
I can tell you, for example, the fastest case I've ever heard of at Prudential is within 72 hours.
Yes.
A claim was paid. That is unheard of.
Even before the guy was buried.
Yes, even before the guy was buried. Within 72 hours, the at least all the documentation and processing was done. Within the week, the payout was made.
So when Prudential left the market in the 70s or 80s, what happened to the policies that were there then?
So, as I mentioned, they left because of many other factors, including the geopolitical factors that were going on during the time.
Yes.
But everybody who was a policy holder at the time of their leaving, their policies remained in force.
Yes.
And everyone whose policy came due in the interim period between when they left and when they came back
Were all paid.
were all paid out. This is an
You said 170-year-old plus.
a 170-year institution
Okay.
with a global presence
Yes.
that has a track record that is unmatched
itself,
in the
okay.
industry.
Okay.
Yeah.
And that is, you've done, you started with income,
Yes.
replacements, you've done
Preservation.
wealth preservation.
Mm-hmm.
So you also mentioned something to do with business succession and something to do with key person.
Correct.
What is that all about?
So I always say life insurance is for everybody.
Yes.
I don't know if you are familiar with the Shannon Sharp and
Yes,
the
Lakers in 5.
of Lakers in 5
Yes.
fame.
Yes.
I always say, whether you are a musician, whether you are a politician, whether you are a physician or even a magician,
Yes.
you need life insurance.
Yes.
Whether you're a doctor, whether you're a farmer, or any profession,
Yes.
you need life insurance.
Yes. But people say it's for the rich man, for the old rich man.
That is another misconception that we need to be spared
Yes.
with immediate effect.
Yes.
You can start with premiums as low as 3,000 Kenya shillings
3,000.
a month. Yeah.
Can you do like an estimate for me for 3,000 for maybe a guy who maybe a 25-year-old who just started earning maybe is 50,000, he can maybe spare 3,000.
Yeah.
Can you do that?
Let's do the mathematics.
Yes, because the mathematics has to math.
So, assuming you are how old did you say?
25.
25 years old.
Maybe female.
You're female, okay. And you're a non-smoker.
Yes.
And you have 3,000 shillings to spare
Every month.
every month
Yes.
for the next 10 years.
Yes.
At the very least.
At the very least 10 years, yes.
What kind of cover are you hoping or can you expect
Yes.
to receive
Yes.
for an individual, a female
25
years old?
Yes.
The kind of cover you can expect to receive is 2.9
million.
2.9 million.
This 2.9 million.
Yeah.
How much will have been the total premiums in those 10 years?
So the annual premium payment comes to around 33,000.
33 times 10. So that's 330,000 shillings in 10 years.
Yes. So
guarantees you.
The question, because people look at those figures and they're like, but the question I ask, if I offered you 3 million
right now,
yes, for 330,000 in 10 years, would you take that deal?
I'd take that deal like tomorrow, like now.
Yes.
I'll start paying that 3,000 now.
So, and it graduates along the scale.
Yes.
The higher your premium you are able to spare,
the more your sum assured is.
So, what amount are you able to spare?
Yes.
On a monthly basis to guarantee the future that you want for your loved ones?
Yes.
And this is not even with your critical illness and accidental riders.
Yes.
Yeah.
Okay. That is really what I think you mean by generational wealth, creating that generational wealth.
Yeah.
Okay. So
we are talking about which benefit at the moment?
Business and
business succession.
Yes. Then I interrupted it.
Okay. So I was explaining business succession and how this is an incredible tool for business succession.
Yes.
So there are professions which you cannot hand over to your daughter. Let's assume you are
like law.
You are a lawyer, or even you are a musician, or you are in the creative space.
Yes.
It's not something that you can.
Sort of hardware where you live.
If she does not have the passion for it or the interest in it.
Yes, or the talent.
Yes. It's not like shares in Safaricom, which you can hand over.
Yes.
But you are still the breadwinner in your family. You are generating enough income to take care of you and your dependents.
Yes.
Now, if what is the question again?
Business succession.
Yeah.
How can how will it help businesses?
Yes.
As in.
So. And more especially if you are in a partnership, like you said, like lawyers are generally organized as partnerships.
Yes.
So, if at the point when a lawyer is, let's say you are in a partnership, you, me, and somebody else.
Yes.
And let's say I pass away.
Yes.
Your job at this law firm or your share in this law firm has been providing for your family.
Yes.
At the point of your demise, your wife or your daughter cannot come now to the law firm and say,
I want X amount of money.
Yeah, my dad had a third of this law firm, so I'm coming for a third of the money, because it's also dependent on how much work you're putting in
Yes.
at the law firm.
Yes. And how very liquid the law firm is at that
Yes.
particular point.
Yes, and they are not anticipating your sudden demise.
Yes.
So it can really cause a lot of unnecessary
Friction
and hurt and
Yes.
misunderstanding between
Yes.
the survivors of someone who has
The business partnership.
who
Yes.
has passed away in such a profession.
Yes.
So what happens in such scenarios is the partners
Yes.
of a law firm would take out policies on
partners.
themselves,
Yes.
naming either the family of the partners as the beneficiaries,
Yes.
or the company itself as the beneficiary.
Yes.
And this allows for a smooth transition.
Yes.
Your family knows that in the event of your untimely demise,
Yes.
let's assume this law firm will value it at 30 million.
Yes.
They will be paid out 10 million.
Yes.
The partnership will carry on unencumbered.
Yes.
There will not be any
back and forth
or wrangles over ownership of it.
Yes.
On the other hand, it can also be used as a protection for the business itself. Let's assume you're top talent. You're still a lawyer in that law firm.
Yes.
But you're bringing in 2/3 of the business or a third of the business, or your expertise is so critical to the operation of that business that your absence will render the business incapable of making the kind of revenue it's making now. The business can take out a cover on you that will pay out in the event of your demise, enabling them either to replace the kind of talent that you are bringing to the organization by bringing someone else of equal talent, or to just give them time to stabilize,
before they find their footing.
They reorganize themselves.
Is it the same key person insurance is not exactly the same as business succession?
Well, they're similar.
They're similar.
They are similar, but not exactly the same. The differences can come in with regard to who is the beneficiary named on the policy. And also, generally, key person insurances are taken as term covers. So for the duration that you are there, if you've ever worked for a good employer, you will hear people speak about group life insurance. That's a form of group life. That's a form of life insurance. It covers the employees, but it only covers them for the duration that they are working with that company. And after you leave that company, whether through retirement or you move on to other things, those policies lapse. And that premium that has been paid for the last 10, 15 years you've been working there
is up in smoke.
Is up in smoke, more or less.
Okay.
Yeah. So, which is also, it brings me to a very important benefit of whole life insurance. You see, everything else that you insure your car. Every year. You insure your health insurance every year. Every household items.
And I've not claimed anything.
Of course, with the hope that
nothing will happen.
That insurance will never have to kick in. But if that is actually the case, and you drive for 30 years, you never make an insurance claim. All those insurance premiums are
up in smoke.
When you take a life cover, one of the worries that people have is the length of commitment that you have.
That's to take up. Nobody wants to pay until they're 80.
So first of all, Prudential has nipped that in the bud. They're giving you flexible payment terms: 10 years, 15 years, 20 years, up to when you are 65. But still, the commitment is daunting. 10 years is still a long time. It lasts longer than most relationships.
This Nairobi especially.
So people have concerns. What if I lose my job? What if I'm in biashara and for some reason things are not looking up this year? What will happen if I am unable to pay my premiums? In potential as sort of that, you have
because when people say
Yeah.
What if I pay for 5 years and then I lose my job and then does my money disappear?
Yes.
I'm unable to pay.
Yes, that is the concern.
Yes.
So first of all, in case it's a short-term mishap in your finances,
Yes.
your policy remains in force
For how
for
long?
90 days between premium payments. So let's say you've been paying for the last 2 years
Yes.
faithfully.
Yes.
Something happens and you are unable to pay this month.
Yes.
Doesn't mean that your policy has lapsed.
Yes.
You are still undercover for 90 days from your last premium payment.
Yes.
Once you get beyond 90 days and
yes.
you hit now day 91,
Yes.
then now you're talking about policy lapse.
Yes.
But lapse not in the traditional sense or in the general sense that we see in other insurance policies.
It's kind of like pausing. It's
like communication is always key.
Like any marriage.
Yes, absolutely. You have 24 months.
Yes.
Within which you are able to reinstate your policy.
Yes.
So let's assume you're going through a particularly difficult period in your life.
Yes.
And for that reason, you are unable to pay those premiums.
Yes.
As long as you notify through your agent, your underwriter,
that this is what's happening for a period of
you can request to pause that policy
for up to how long?
Up to 24 months. And once you find your feet,
then
you are able to reinstate your policy. Now, what does reinstating instead? At the point of reinstatement, I must mention that it is at the discretion of the underwriter. But generally, if it is not because of any untoward behavior on your part, it will be reinstated.
Yes.
Generally, if you want to reinstate your policy, you can do it in one of two ways. You can pay all the premiums for the period that you have not been paying, or you can redate your policy.
So you extend the
the time. Initially, let's say you are meant to complete payment of your policy
in 2035.
Yes. Now it will move you've been away for 24 months, it will move to 2037.
Yes.
Okay. And you just carry on from where you left off. However, the waiting period will be reinstated for your for death.
Okay.
For critical illness and
disability, accident. Yes. Okay. So how can SMEs really afford life insurance?
I mean, if the starting point is 3,000, which is not to say 3,000 is a little money.
Yes.
But if an individual can afford the cover, an SME
should be able to
do it.
For even the key.
Yes. For your top talent.
Top talent in a small SME.
And if employee well-being is a high priority in your organization, which it should be, you can take it up for your entire staff complement. In fact, life insurance is a tool that companies should employ
to attract and maintain
talent retention.
Yes, because with how employees sometimes are ghosting their employers, that would probably be a good thing.
Yes. I would be incentivized to stay longer in the organization if I know I still have 6 years on my life insurance policy.
Yes, absolutely. So, wealth accumulation. Tell me about wealth accumulation and how life insurance comes into play.
You know, for people like you and me who are, let's be honest, we are in midlife.
Yeah, I have gray hair.
There's a meme I saw about midlife and how it should include anyone who's over 35 and has an air fryer. It was funny in the moment, but it is actually true. It is actually true. The life expectancy in Kenya is
70-ish.
around 70
Yeah.
years. So anyone who's 35 and above is
Yeah.
squarely
In the middle.
in midlife. And once you hit midlife, you start evaluating your life
Yeah, kabisa.
up until this point. What is going to be your legacy?
Yes, what will I leave my
What will I
loved
leave
ones with?
my children?
Yes.
Have I bought a house yet?
Yes.
Have I built any shags yet?
Yes, do I have my roti maguta?
Yes. And while that is a dream for the majority of us,
Yes.
a good number of us may or may not actualize those dreams.
Yes.
If you look at the cost of housing in Nairobi at the moment,
It's absolutely nuts.
a 2-bedroom apartment
Unaffordable.
in Ruiru,
10 million maybe.
the prices are just,
even 8 million is
they're not
still, yes.
allowing home ownership
Yes.
as things stand.
Yes.
And if you tack on the cost of mortgage, you end
Yes.
up paying 2 to 3 times the cost of that house.
Yes.
The reality is a lot of us are going to be renters for life.
Yes.
Because just the cost of buying a house is just, it's
Beyond
extremely high.
Yes.
So when you're thinking legacy and what you want to leave your children behind,
Yes.
life insurance can be an exceptional tool for creating an inheritance
Yes.
and a legacy for your children,
Yes.
and a liquid inheritance.
But
for your
someone will say,
children.
I'd rather go buy a few plots, I leave it to my children.
You know, when you pass away,
Yes.
and we will talk about passing away a lot on this episode.
Yes, that's a
but
death
because
episode.
it's a subject matter.
Yes, death.
Yeah, it is not that we wish death
Yes.
on anyone. Or,
It's just the reality.
yes, it's the reality.
Yes.
When you pass away,
Yes.
your children, in the immediate aftermath
Yes.
of your death, your children cannot go and eat
That
2 acres
in Kamulu.
in Kamulu.
Yes.
They need school fees today.
Yes.
They need rent today.
Yes.
They need
food.
clothes, food.
Yes.
They need everything today. You need an estate which has some liquidity
Yes.
in it.
Yes.
And if you have been unable to acquire any of these traditional assets like the Mapiloti Maguta,
Yes.
a liquid asset
Life
is
is
still,
I see. I'm sold. I'm getting
is
sold on
still
it.
fine. It's
Yes.
like leaving your children bonds
Yes.
or an MMF.
On
But-
that issue,
But for a fraction
yes, of the
of the cost, you see, a bond you actually have to have. If you have 10 million bonds, you actually have to have the 10 million
right now.
to put in those bonds.
Yes.
The cost of taking out a 10 million cover
Yes.
for your children and the bonuses that accrue over the period while you are still alive will still allow you to live an extremely
Comfortable life.
respectable
Life.
inheritance
Yes.
for your children.
Yes.
So
What
there
if
are some communities, for example.
Mhm.
I will not mention which communities, but there's a subsection of Kenyans who have really taken up life
Yes.
insurance as a form of wealth accumulation
yes,
and
legacy and
legacy
generational
and
wealth?
generational wealth
Yes.
for them and their children. In
Yes.
fact, it is said that when you turn 25 in that community, your first job, it is a must. You have to take
life
up
insurance.
life insurance.
That should be a law.
Honestly, life insurance is an extremely high
Value.
product
Yes.
in terms of what it is that you part with
Yes.
to secure it,
Yes.
and what it is that it delivers
Yes.
for you in the long term and in the short term.
So why is the penetration so low? Is it because it's a cultural thing? Is it an information thing? Is it a selfish thing? Because now, what is that? Why is it 1.2%? What are these 98
Well,
points?
it's a combination of all those factors and more.
Yes.
For me, I think it is definitely cultural, because as Africans, we do not want to speak about death and talk about death and plan for death.
Yes.
It seems like as though you are wishing for death. But also the nature of the misconceptions around life insurance up until now, where their providers have been offering it with the premium payment terms for the entirety of your life.
Yes, nobody wants to pay till
Nobody
they're 80.
wants. Can you imagine paying for 30 years and then in the last 10 years of your life you are unable to pay the premiums?
Yes, that is more.
You are now in the
most
sunset
vulnerable,
years,
yes.
in the most vulnerable time. And there are some underwriters who have your premiums that going up with age. So the offering, it really cannot be overstated how exceptional the product Prudential Insurance is offering.
Yes, they lock it to 10, 15,
Yes.
20 years. You can plan for that.
For a fixed amount that does not vary with your age.
Yes.
It is an extremely high value offering that everyone should take up.
What if some people say maybe if I leave my children or my wife and then she marries another fella, then they eat all my sweat. What happens? Or what?
First of all, I don't see I don't see an issue with that.
I know some people have an issue with that.
You are not there, okay, but
yes,
some people may
have an issue with that.
May have an issue with that. But there are tools that you can use to
safeguard
actually safeguard your dependents. If you want to make sure your children are educated, you can have your policy, the beneficiary of your policy, be a trust that is set up with specific instructions on how the proceeds are to be utilized.
Yes.
Yeah.
Is it planning and enhancement, or that is a different?
So when we say enhancement, if you have been fortunate enough to have these assets, the land and the bonds, then the enhancement is the liquidity that it will bring
onto the estate.
Your demise.
Yes.
That with immediate effect upon your death, while probate and succession is going on, your family is not going hungry, waiting for 44 years for all your relatives to
come together and agree that this. So yes, the immediate injection of liquidity into the estate is what is enhancement. Okay. Correct. On the other issue, so I think we've covered everything. As in that we had, you said income protection, wealth preservation, key person insurance, estate planning, and business succession.
Correct.
So, Prudential, why are other insurance companies not doing what Prudential is doing?
I think it's I can't speak. I don't know the internal workings. Of those companies.
So
I can only speak for the what I have seen in the market. From in my opinion.
Because the math is really attractive and it really makes sense, and I believe maybe more people should know about it.
Absolutely. Absolutely. So you asked a question, why is the penetration so low?
Yes.
I think it's who has been offering it, the perception behind it, the perception around the cost, around the period that you need to pay the premiums, and just we are now in an age where you can educate yourself on the internet. I think I don't expect it to remain at 1.2%. Anyone who has ears, for me, even when I tell people about it, whether they buy it or not, I never come away thinking, oh no. For me, I consider it their loss. For whoever's, if you don't take it up, you're missing out on an opportunity that is just
mind-blowing. The way the math, like when I look at my rates, if I started 10 years ago and now, I could have, it's almost maybe 30% more.
Literally.
And if I start and I delay for 5 more years, what would be my implication?
So let's just take the example.
Of the 24 million.
Of Kagwi at 25. Kagwi at, let's say, 35. Kagwi at 40.
And if I delay for now 5 years, what will be my implication? Because I want us to just the math to just really math.
Okay. So if you had, let's say 15,000 shillings to
Yes.
spare.
Yes.
25 years ago.
25.
When you are 25
5
years
years.
old.
Yes.
The kind of cover you would have been looking at, and by now you'd have completed paying the premiums.
Yes.
It's 25 million.
25 million.
Yeah.
At
If you would
35.
have taken it 5 years ago when you were 35,
Yes.
the kind of cover you would have been looking at is 19 million.
Hey, okay.
So you've already lost there 6 million just waiting.
Yes.
Now you are when you are
At
40.
40. Yes. What do I
The
expect?
kind of cover you're looking at
Yes.
is, I'm rounding off, but it's around 15.5 million.
And all this time we are using the premium of how much?
15,000
Okay.
across the board.
Across the board. At 45, if I delay 5 more years,
Yeah.
what do I expect?
In 45, in 5 years,
Yes.
the cover you can hope for is 11 million. All of this 10-year payment
10-year payment.
period. Yeah.
So if I delay in 5 years, I will lose my estate.
Yes.
We
Yeah, you
lose,
can look at it that way.
we lose 4 million.
You're just throwing it away as we speak. So I always say, people always think these are things that you plan late in life. Even
The earlier, the better.
for young people, when they say, oh, me, I have no dependents.
They should know.
Then we regret not knowing
earlier.
about this earlier and not taking advantage of this
Yes.
earlier.
Yes.
There is insurance in all categories only gets more expensive
Age.
as the older you get.
Yes.
So the earlier you begin, you can find, like for us now to take a 25 million policy, the cost, let's just
Yes.
do it for
Just do for 40.
comparison.
Yes. The same money I'd have gotten if I was 25,
Yes.
it was 25 million. So
Yes.
for me, if I expect to get 25 at 40,
Yes.
what are the premiums I'm looking at?
Okay. So if you expect to get 25 at 40, still it's affordable. 24,000 shillings per month.
Yes.
Well, affordable depending on your pocket. But are you seeing the gap
Yes.
in
Premiums already.
Yes.
That's a whole 10,000. That's probably
Yes.
40%.
Let's see if you wait until you're 45.
Yes.
Your premiums are now 31. They're double what you would have
Done
done at 15.
at
Now
25.
you could be on your third policy. But, oh, by the way,
Yes.
there is no limit to the number of policies that you can take. So
can
if you
take
took
parallel.
one when you're 25, it doesn't mean now you're locked out from taking
You
any
can take
addition.
parallel and even
Yes.
parallel and subsequent.
Yes.
Okay.
Even in the middle of a policy, you can take out another policy if
Please, people
biashara
out there.
imejipa.
Skizeni.
So I think that brings us to
Yes.
the conclusion of this discussion today.
Yes.
We hope you enjoyed
Yes.
our discussion, and we hope you learned something from it, and we hope you'll be able to act and avoid some of the mistakes
Yes.
that we made
Yes.
as young men.
Yes.
And even as
And now
they
as we're
say,
growing older,
the best time to plant a tree is 10
20.
years ago,
Yes.
but the second best time
Is now.
is now.
Yes.
Thank you.
Thank you.